so they do all the leasing, all the maintenance, all the insurance. I mean, they carry the whole project. You literally have to get the 179 deduction. You literally set up your own business. So it's your LLC. Your LLC owns the equipment. They just will take it from there and get it leased out and managed and maintenance and all that stuff.
Let's dive right into that, because that's kind of a new topic here. I guess leverage into equipment leasing. So what does that look like? Let's say someone had a $1 million capital gains tax. How might somebody leverage into equipment leasing? What would be the risks? Some maybe some of the returns, and what kind of tax write-off would they get with the Section 179?
Okay, so let's just assume we got $1 million tax. I'm going to do some in my head, so forgive my calculations if they might be off. But let's just say we got $1 million taxable event, capital gain, 15%. So we're going to pay $150,000 in taxes. A good rule of thumb is, here, let me just pull my little quick calculator up here. So if I need to get $150,000 deducted from my taxable income, I'm going to need about a $187,000 tax deduction. And then, so in an equipment leasing world, we can typically get an 80% tax deduction the first year, which means I need to invest about, I need 187,000. Sorry about that. I should have had some.
Maybe about 225, yeah?
Yeah. So if I put a couple $100,000, no, I don't even need that much. If I put about $50,000 into equipment leasing, and that gets a 10x leverage, so that means I'm going to own $500,000 of equipment, and then I'm going to get a $350,000 tax deduction, which at a 50% tax bracket, let's just say, is going to give me about $125,000 in a tax deduction. So that would easily wipe out $150,000 in capital gains.
Okay, so about $50,000, and you're going to leverage that, like kind of like a down payment with the bank, and then that's going to get you $500,000 ability to lease that out, or that equipment, or you bought that equipment, right? And then you're leasing it out, and then you're going to get that write-off. Is that a fair summary?
That's a fair summary.
Okay.
And we've worked with a company that does all the back. I mean, so they do all the leasing, all the maintenance, all the insurance. I mean, they carry the whole project. You literally have to get the 179 deduction. You literally set up your own business. So it's your LLC. Your LLC owns the equipment. They just will take it from there and get it leased out and managed and maintenance and all that stuff. They have about 11,000 pieces of equipment across the country, and just about every state has a location. And this is typically commercial. I call it big dumb equipment, stuff that lasts years and years, but the depreciation on it's amazing.
That sounds fantastic. And by the way, it kind of reminds me a little bit of oil and gas, right? With some of the benefits there. How would you compare and contrast those two, Dan?
Yeah, the only difference is, oil and gas, I mean, it's becoming more of a science. It used to be, that oil catting was somewhat of a risk as to whether or not they would tap into something. I don't think that risk is quite there. The thing I like about this is that it's a tangible asset. I mean, and it's literally in your name. So that if, push comes to shove, worse comes to worse, you literally could sell this equipment on your own and probably be pretty close to whole, if not much greater than whole, simply because of that tax deduction that you got up front.
Got it. And when does it come back to bite you? Like in an investment real estate, you can 1031 exchange, right? And you can even use the deferred sales trust. When does it come back to bite you on that equipment?
Year 5 in this case, because it's a 5-year, it's a 10-year AM, 5-year balloon, so to speak. So in year 5, they're going to sell the equipment. They're going to sell it for what's owed and the principal you put down. So that's going to be a recapture, but it's a real simple process. All you do is turn around and take your money and do it again, and you're right back in the game. And the guys that we work with, they haven't paid taxes in 10 years and make huge, lots of zeros every year.